Welcome back to session 4 of the Digital Disruption in Agriculture conference from the Australian Farm Institute. If you just remember back again, Mick at the beginning of the day posed 2 questions, whether digital agriculture was going to be the next big revolution, the third revolution in agriculture, and what do we have to do in Australian agriculture to realise the benefits of this potential revolution. Agriculture is obviously more than just the farm. It's more than the farm level. There is a whole industry extending right through the supply chain to the consumer. And this session is going to focus a little bit more downstream from the farm gate. Our first speaker in this session is Nathan Cattle, who is the General Manager of NZX Australia. The NZX group includes organisations such as ProFarmer Australia, the Australian Crop Forecasters and Clear Grain Exchange. And Nathan's going to talk a little bit about digital technologies and what some of the implications are in trading systems. So thank you, Nathan. Welcome to the stage.
Okay, thank you. Thank you, AFI, for hosting this event. It's been fantastic, the discussion this morning. And this afternoon, of course. All right. Well, my last name's Cattle, so obviously I'm destined for a career in agriculture. Probably the most important part of my CV is that I'm a Lake King, West Australian country boy. That's where I grew up and my parents still farm there. If you don't know where that is, 500k southeast of Perth, with one of our farms borders a rubber-proof fence. So it gives you an idea. It's I like to term it God's country. But righto, what am I doing here? What am I going to speak about? I work for NZX. Quick show of hands in the room that has heard of NZX. Some, excellent. So we run the New Zealand Stock Exchange. Or a New Zealand-owned company. What are we doing here in agriculture in Australia? In essence, NZX is a markets business. That's how we define ourselves now. That means we have expertise in running markets and exchanges, the infrastructure sitting behind that, allowing buyers and sellers to come together and make a transaction happen. That's what we see our strength in. And that's taken different forms. So we run the stock market in New Zealand. We also run an energy market in New Zealand. We run a dairy derivatives market, milk futures, milk powder futures in New Zealand, and we run a Fonterra shareholder market. The investment that we've made in Australia has been in the grain space and in the form of the Clear Grain Exchange. And that's where most of my discussion today is going to be focused. What's the value? The first part, which has been the big theme that's come out of speakers already today. How do we add value? Because digital technology is fantastic and we can all get really excited about it, but we do need to be adding value. The other side of our business is an information provider. So we provide independent information and data services. And I suppose that's another theme that's come out of today is, a lot of this technology, we end up generating a lot of data. How do we then standardise it and make use of it? And that's what the brands of ProFarmer and Australian Crop Forecasters do in the grain space. And those services continually evolve. So that's us. So let's jump into it. So basically the first part, what I want to talk about is how do we add value? How does the exchange, and again focusing on the exchange, how does it add value to our participants? And the second part is a bit of Clear Grain Exchange has actually been around 8 years. So I want to give a bit of history, given there's a lot of people in the room that are probably looking to make investments in digital technology, a bit about our experience and the challenges we've come up against and lessons learned, if you like. All right, so straight into the value. That chart is the best indicative bid put out by buyers and collected by ProFarmer on any day for a particular grade of wheat at a particular location. In this case, it's ASW Melbourne. So the highest price advertised by a buyer to buy grain off growers. That plots the actual trades on our exchange of ASW wheat in Melbourne. So you can see that on a particular day there, in that particular day, a grower or a seller had a price target of that price. Had he waited for the bid, she waited for the bid to reach that price target, it wouldn't have sold until somewhere down the line. And in fact, it may not have got there, the indicative bid. So it's actually creating real transparency. Now, how is that value being generated? In effect, it's enabling a match that may not have occurred. So how does the value come about? It's basically in three different ways. First of all, the exchange provides the ability to offer grain at a price. Secondly, it increases competitive tension to the sellers. And thirdly, there's a secure settlement functionality. I'll touch on those individually. All right, so what we've got, the way the marketplace typically operates at the moment is we've got a bid-driven market. So buyers on one side, we've got a number of buyers out there that are advertising a bid price of what they're willing to pay for grain on any particular day. And ProFarmer, we accumulate all of that and we put it out to make it easy for the growers to see. On the other side, the seller delivers it, they harvest their grain, they put it in the silo, but the buyer can't see what the quality is, what the quantity is, and in fact what price the grower wants for that grain. So the first thing that the exchange does is it allows a mechanism for the seller to expose a quantity, quality of grain at a price that they're chasing. Now what that allows is the buyer can more easily identify that actually that works for me and I can engage and buy that particular grain. So that's it in a nutshell. Now, with that, the activity from the buyer is actually become a lot simpler. The only way that the buyer's been able to generate the transparency on the seller side in the past has been by investing in human capital to have those relationships with the grower and the network. So by making it simpler, it actually opens the door for more buyers to participate in our market, and we've seen that evident in the exchange. Now, by introducing new buyers, introduces new risk to the seller. Because typically the way the industry is operated is that the seller sells their grain, then they transfer title of that grain and the buyer pays on particular payment terms. Now if we're introducing new buyer parties, obviously that introduces counterparty risk. So the other part that the exchange does is it does a clearing function, and in effect the seller retains title of their grain until the buyer funds are received and both sides are cleared. Now, so in a sense, very similar to how a share market operates. That's what we've got here. So the share market now trades on a trade plus 2 settlement in terms of when you receive your money or your shares. We trade on a T plus 7. Now the spin-off benefit of that secure settlement functionality is that given we're holding the monies and putting it through to each party, is it becomes a really effective mechanism to do the associated disbursements with the transaction. So for instance, government levies, plant breeder, endpoint royalty, bulk handler collection, to the point in May, one of the bulk handlers, we collected more than $1 million of fees for them over numerous transactions. So you can imagine the amount of paperwork that comes out. So that's the way the industry is operating at the moment. It trades, and then the invoices and everything else happens after the fact. It can all happen in a seamless way here. And that also has other possibilities in terms of entities offering finance to the farmer and the collection of monies on that on the way back in. So that's it in a nutshell. That's the exchange, and that's how it adds value. The value is that it essentially helps enable a match or a trade that potentially may not have otherwise occurred, because the buyer may not have been able to find the seller, and the seller may not have been able to find the buyer. And that's what a transparent market and an efficient marketplace essentially does. Now, that's really the value proposition. That's the simplistic form of it. It all looks pretty simple. Now, if we actually look at how, then in practice, how that operates, the industry used to trade at a port zone level. So we've got 15 to 20 major ports around Australia. And years ago, typically the major transaction was always done at a Melbourne port level or a Port Kembla port level. Now the way the industry's evolved, we've got a differentiated pricing up country. So the platform that we provide actually trades at all of those up-country sites. So in essence, we've got more than 500 individual marketplaces, all operating at once. And then within that, you've got 20-odd grades of wheat, you've got a similar amount of grades of barley, and all the other different commodities that come out of it. So you can imagine the number of marketplaces that are actually operating simultaneously. And when I say marketplaces, the bid line up and the offer line up to allow a match to happen. So that comes back to the connectivity and the databases and the amount and all those sort of similar challenges that are had. And that's really where a lot of the IP and the value happens. It's churning away in the background, and at the front end, it's got to be a simple experience for the participants. So that's what we do, and that's the value. Now I want to talk a little bit about our journey. So Clear Grain Exchange has been around for 8 years, and this is where I sort of differentiate disruption for disruption's sake as opposed to disruption that allows enabling. So that's the enabling that we've been through. Now let's talk a little bit about the journey from the vantage point of hindsight. So this is a chart of cumulative volumes on the exchange by season. Now, I'll use a laser quickly, but first year, second year, third year, fourth year, so we're looking pretty good at that point. Fifth year, sixth year, seventh year, and how we're tracking currently in the 8th year. So we're pretty happy with where we're going in our season to date, year on year. The KPIs we set ourselves and everything else are looking pretty good. Now, that doesn't look very promising when you look at it like that. So I want to go through the reasons as, you know, what are the challenges been. First of all, there's roughly a 40 million tonne market. There's about 40 million tonne of grain, pulses, oilseeds grown in Australia each year. For a large part of the exchange's lifespan, it's been focused on the market available to it within the GrainCorp sites on the East Coast. So it's 40 million tonne. Straight away we've come back to the amount of tonnes that have been available to us in GrainCorp. And if I go back to the previous slide, don't quote me on these numbers, but it'll give you the picture. It's around 12 million tonne receivables, 9 million tonne, 7 million tonne, 6 million tonne, I think it's 7 million tonne. Again, don't quote me on those numbers, but you get the idea. So our addressable market, so there's a 40 million tonne market. We've had access, or we've concentrated and had access to one portion of that. So actually, if you think about those numbers that we've had access to, the market share hasn't been too bad. The market share journey hasn't been too bad. So what have we done in the last, why have we seen a bit of an uptick this year in the year-on-year numbers? We've basically opened up and relaunched into South Australia and WA, so it opens that market again and we're getting some initial growth there. obviously this is one of our major KPIs, is to continue to increase our addressable market and get further into that 40 million tonne that's out there. However, that's all good, that's the addressable market, but in terms of market share, we're still not meeting the mark to sort of get that quantum. We're seeing the take-up from the innovators and the early adopters, but we've got that chasm to cross, which is pretty typical of technology companies, and we haven't been able to do it today. We think we've got a pretty good value proposition, it's pretty simple, but we haven't been able to do that yet. And I really liked Tim Neal's discussion on the 6 C's this morning in terms of adoption. I can relate to that a bit. So, what are we doing to try and generate that chasm? First of all, it's got to be simple, ease of use. This is in effect how the industry trades, at a pricing point. I'm demonstrating a pricing point here. So like any supply chain, there's a number of different levels along the supply chain from farm gate right the way through to the end user. And as a result, there's different costs that get incurred along that supply chain. Now, a trade can happen at any point along that supply chain. This is where the majority, forget the DSU, delivered site is essentially where the majority of grain trades in Australia. In WA, it's free in store. This is the pricing point that our exchange has been trading. So we're adding a level. Now we're actually talking about the same price. It's just we're talking at a different point in the supply chain. So I akin it to DSU on there is English, and free in store is Chinese, and we've been in the language that is. So in effect, we've been trying to teach the industry Chinese. So what are we doing? As of Friday next week, we're moving it back to the delivered site pricing. So we're pretty excited by that. And I can see a few nods in the room. No doubt there's some farmers that have used us. It has been the number one bit of feedback into our office, and I'm glad to say that we're making the change come the end of next week. That'll be live. So ease of use. The other part is, again, Clear Grain Exchange, when it first came out, it was 8 years ago. Now, was the industry ready for it back then? The industry's come a long way. I remember 5 years ago, what it took my dad to feel comfortable transferring $500 from his savings account into his Streamline account in NetBank. And a lot of that was because dial-up internet connection, slow, everything else. Now, what we're essentially asking them to do on our exchange is, if he offers 1,000 tonne at a $250 price, he's talking about a transaction size of 250 grand. So the trust factor needs to be there. They need to have absolute certainty in this. And that comes about as the technology continues to improve. So the connectivity, those sort of challenges around rural areas is significant. But in essence, the grower can offer their grain from the paddock on this platform, on the exchange. So that's been one limitation, as I put it. Now, what are we trying to do there? Is actually, I like this word, champions. One part of our business that we're actively seeking and engaging with over the last 12 months has been to identify these champions to help promote the product, the exchange. And that is people that are providing services and have a one-on-one relationship with the grower. So going back to my dad's NetBank example, the way that it took, what it got him to feel comfortable in actually transferring $500 on an exchange was the phone call on with the local banker, stepping him through how to do it, and then he gets to the point of pressing the button and Dad says, actually, I don't feel comfortable with this. Hey, don't worry about it, Tim. Next time you're in town, call into the bank and we'll go through it. But my background is actually as a consultant in price risk management. I know how much value that those professional and those relationships those one-on-one relationships have with growers. So we're actively identifying, and we've got some models. We've got a number of businesses in South Australia where we've just relaunched into. That's working well for us at the moment. And basically we're continually seeking that. So what's the role of the champion? It's to help. The client ultimately makes the decision, and our platform just ultimately helps with the transaction. So and in the past, we've probably been seen as a threat to those businesses that have had direct relationships with growers. And ultimately, we want to be an exchange. Now, exchange is open to all participants. And we've got financial models and everything else around that that gives those businesses security around those relationships. So that's the approach. We're open to all participants. And that's where I sort of, again, it's differentiating between being a disruptor for the sake of disrupting or focusing in on the value and being a digital disruptor that creates, that enables value. And that's where I suppose that's the final point, the final slide. You know, the Clear Grain Exchange was the first mover into this market. It hasn't yet got the critical mass to be a success. Now a lot of people that are looking at digital technology, you'd be familiar with the first mover versus the improver, and ultimately we need to be both, and that's the culture we're driving from internal. So that means there's continued investment in what we're trying to do, and that's just a couple of examples. That's all I have.